Ladies and gentlemen, welcome to the market update, the weekend analysis. My name is K Kim. I will be analyzing this market with you this evening. Hope you guys had a good day trading today. Hope you guys had a good year this year. What a year that we had in 2020. I believe this is going to be the year that everybody's going to be talking about throughout the years and decades. Just like, how so many people are talking about 1987. Fast forward to 2020, we did see a very similar percentage correction, right, on the S&P. We saw 35% correction here, and we're talking about this move right here. That's a 35% correction since the peak, which is a same amount of number to 1987 correction that we saw. 35%. Only difference was that 1987, did you know that it took 16 months to get back to the all-time high level after 35% correction? 16 months. That's 1 year and 4 months. Do you know how long it took S&P 500 to get back to even in 2020 after 35% correction? 4 months. Just took 4 months. So 4 months versus 16 months, right? Almost 3 times faster than 1987. So, I believe that traders and investors gonna start, this is 2020 is gonna be that year that a lot of people will be talking about for decades to come, just like how so many people talked about 1987. A lot of people like to mention, right? But again, we saw much faster recovery than 1987. And with that, 2020 decline, 35% decline is going to go down in history as the fastest recovery this market has ever produced, ever in the history of stock market. And that makes it one of the best buying opportunity ever this market has ever produced. Not because how much correction it suffered, it's because how fast the market moved up after that correction. We're talking S&P, right? S&P performing 70% moves since the March lows, right? We're talking NASDAQ performing about 80 to 90% since the March lows. We're talking semiconductor performing 120% since the March lows. Russell 2000 performing 110% since the March lows. And these kind of numbers, we're talking indices. We're not talking about penny stocks. We're not talking about these tech stocks. We're talking indices. For these indices to make that kind of move, it's unheard of, right? That's why it's going to go down in history as one of the best buying opportunity this market has ever created. And so many people are going to be talking about it in the next 10, 20 years. And I don't believe we're going to see another going into, next couple years. I don't believe we're going to see another decline like that. Though I see a lot of people are talking about it, that we're going to see another 30% or something like that. I don't believe so. And I'm going to talk about all of those in this video, recapping everything, why I believe that 2021 is going to be a good year, and it is all coming up right now. All right, so let's do a quick, recap or quick follow-up on that 65-minute chart first, and I'll come back and I'll give you guys total recap on the S&P and what I believe the market is going to do as a whole in 2021, right? So let's do just quick recap, quick update, excuse me, on the 65-minute chart here, which we've been talking about this entire week. So this entire week we put a lot of focus on what? There are two things we were focused on. Was that rising pivot, right? So that was a prior resistance, and then new support there. We also talked about the moving average and my short-term moving average scooping action there back in, before the Christmas, and then this is the Christmas Eve price, and you see how there are little pullbacks, the short-term moving average scooping action, and then we came to the market on Monday morning. We saw a nice gap up, and we saw that my short-term moving average continues to move higher, right? and price was well above my short-term moving average. Started failing back, or started not failing, but started pulling back, and then we start to track that rising pivot, and that's exactly where we saw a move today towards the end of the day today, right? That's the level we talked about. That's a gap area, which is support, rising pivot, which is support, and the short-term moving average all colliding in that vicinity. And yesterday we did more in-depth analysis of why we have more bullish sentiment going into today. So we gotten above this level here, right? So that's the neckline. We can even look at this as a short-term, micro-term double bottom. That's the neckline. We broke above it. I think as long as we stay above 372.80, 372.50, we want to continue to give benefit of the doubt to the buyers in the micro-term and the short-term. Let's check out that oscillator real quick. So the oscillator actually prematurely crossed up. We didn't come all the way back down to the bottom of its band like it did here. Instead, we prematurely crossed up, similar to what we saw back in early December. And with that, you saw we did see some bullish run there for the next several days or so after we saw that premature bounce, right? That tells us that bears are weak, right? Because when the oscillator's coming down, bears were not able to take advantage of that. Price move sideways, we talked about yesterday. That means we're correcting through time, not through price. We're letting that oscillator what? Reset, because bulls are tired after the oscillator gone back up to the overbought zone, letting the oscillator pull back. Bulls are resting right above that rising pivot and the short-term moving average and the gap area. And then once bulls are rested, they start pushing up again, right? So let's get back to the daily chart here. So looking at the daily chart here, we've been talking about this rising pivot, right? And that's a big picture rising pivot here. We're just right on it, right? We're just trying to stay above it. We are above it as of now. And so this tells us, and what's important about this is that this market, you know, because you saw here and that resistance was acted pretty severely here. We saw 20% correction, 35% correction. And then we met one more time. Instead of coming down hard, we actually saw what? 10%, I think 11, 10%, and that was 8% correction there. You see how the market gets 10 and 8? But after bouncing and got into a consolidation, right? Because that's how this market absorb volatility and the weakness. What if it was 10% and then 8%? That would have been pretty steep decline. That's almost 20% decline if that would have happened. Instead, come down, goes up, and come down again, and then we consolidate, right? Why? Because bulls are tired. Bulls brought it up this much. That's some big move there. Instead of making this coming down all the way, it stops short, pushes it one more time, come back again, and gather its momentum. And then what happened? Broke above the neckline, and we've been grinding ever since. And grinding is never a bad thing in a bull market, because we saw something grinding like this here. That was a grindy move. That's a grindy move. We saw some grinding move here. Grinding meaning like it doesn't make a swift, move, fast, big moves. It's just inch by inch, slow movement. We gap up, but it fades sideways all day. Gets up a little bit, right? And I've said this before, that this is how buyers like to operate anyway, right? Bulls gonna take their time, and that's what they do in a primary term uptrend. It's not because market is weak. It's not because market is losing steam. Because if you thought the market was losing steam here back in 320, well, it went from 320 to 360 in just a couple weeks after it's been grinding all weeks, just moving, just inch by inch higher. So, what I would look at this is I would look at that as market is preparing. And what I see is if I actually go to daily chart and look at my, oscillator, just how I looked at that 65-minute oscillator, it looks kind of similar, where it's letting the oscillator kind of reset before making its move here. So, well, overall though, what I wanted to do is that I want to check out this chart. This chart was actually featured in my blog post that I posted, December 22nd. You can go ahead and read it, and you can see that chart right here. So I want to actually do a little analysis here with you guys. So this is important because now we're looking at things in a primary term, right? Keep in mind, this is spider monthly chart, meaning each candle represent 1 month worth of data. So when you look at a monthly chart, the good thing about it is, you know what I mean? Because on a daily basis, there's a lot of fluctuations, there's a lot of shenanigans, there's a lot of up and down movements. You can kind of see a smooth part of run. So you can see right here, this is what you saw in 2013 through 2015. Did you know that this was known as the most hated bull market ever? 2013 to 2015 run was known as the most hated bull market. And this right here is what? Known as Trump rally, right? Known as the Trump rally. But when you look at a monthly chart, do you see how it looks pretty smooth, right? It looks like it's pretty steadily went up for 2 years straight. Because you see, we saw some big declines prior to it, and then, things got much, much easier, right? Same thing happened here in 2015 and 16. We saw these volatilities here in 2015 and 16. We're talking 15% corrections back to back. And then once it broke out, you can see from late 2016 to early 2018 how smooth that bullish run was. And then from early 2018 to late 2020, we got into a difficult market environment. So again, that's the 2008, financial crisis. And then we bottomed here and we made a run. And then what happens? We get into kind of a difficult years, right? That we're talking 2010, 11, 12. So about 2 years or so, 2 years of difficult market, right? Because we see these pullbacks, right? And this is a monthly chart. We're talking 1, 2, 3, 4, 5 months of correction here, right? This is a couple months of correction there. There's a couple months of correction there. So market wasn't always, it was in a difficult environment in late 11, 12, pretty much 2 years or so, 11, 12 to early 2013 January. So 2 years, 2011, 2012, 2 years of difficult market environment here, right? And then what happened? 2 years of a good environment, right? A smooth environment. It's funny when I say this, when people look at this, they're like, yeah, 2013, 14, 15, it was a good bullish run. Go look at your daily chart and how many times so many people are not only calling for the crash, and how many people were freaking out every time there were 5%, 6%, 7%, 8%, 10% corrections. Because even in a smooth bull run like we see here, right, there were corrections. There were 2 to 3% gap downs, shenanigans, right? So many people are freaking out. And if you're always being in and out in the market, what happens is you tend to miss out that big move, right? But what I'm trying to get at is you get a difficult year. Same thing happened in 2015 and 16. You get a difficult year, and then in good years follow, about a year and then 3 months. You see that. You see how that candle, again, known as the Trump rally, those candles look smooth again because we're looking at monthly chart now. Each candle represents each month. But on a daily basis, there were corrections. There were gap downs. There were 3% down days. People are freaking out every time we saw something like that. But people who understood the long-term primary term uptrend was able to ride that move and fully benefit from that big move. And any kind of pullbacks, will give you opportunity to accumulate. What I could say is, primary term uptrend, especially when you get into that kind of a, smooth bullish rally like these here, like we saw in 2013, 14, and 2017, it is better to wait for a pullback and then buy that dip versus trying to time it and trying to make money on what you think, the top is here or the correction is coming. Because what happens is once you look at the market a certain way, you're trying to short the market, what happens is you end up missing out buying opportunity. Because after a big decline, it's gonna feel like even in this part of rally here, it's gonna feel like there's gonna be more decline. So what a lot of people do is they're gonna either hold on to their shorts, maybe short more, and then as the market bounces, and the market never gives you perfect, like everybody can see reversal. Somehow, someway, once everybody knows that was the reversal, it's too late. The move has already been made. And then what happens is a lot of people trying to short, they realize market has already gone back up to the highs, and you can't go long now. But they think it's a double top, they trying to short it, but the market doesn't come down, the market keep going higher, and that's why you not only you missed out your opportunity to buy on that correction, but you're gonna continue to miss out on a big rallies because you feel like you can't go long now that you missed it. That's it. Precisely what happens when you're trying to short the market. You're trying to short for a couple percentages and you ended up missing out double-digit moves to the upside. But let's not sidetrack here. So what I'm getting at is, okay, we had a tough year. 2018 with a 12% abrupt correction. 2019 with a tough 20% abrupt correction. 2020, very tough, 35% incredibly fast correction. It's been difficult last 3 years because market never really got into this smooth bullish rallies like we saw here, right? That most hated bull rally and then the Trump rally. But good news is, when you look at this here, this is what I call, you guys know that's a rising pivot, that's a pivot, and that's a pivot. So we get into difficult years, and then as the market breaks out, we get into what? Smooth rallies that could last 2 years to maybe a year and a half. There's another smooth rally. And I believe we're going to have smooth rallies in the last year to 2 years. Again, that doesn't mean we're not going to have shenanigans on a daily basis. That doesn't mean we're not going to have pullbacks along the way. That does not even mean we're not going to have 10%, maybe even 15% corrections along the way. We will have those corrections. But I think the biggest question is the rally that is coming in the next couple of years. Are you going to able to capitalize from it, right? Materialize from that move? Because it is extremely difficult, in these tough years. If you don't know precisely what you're doing, it's difficult to make money for many people, right? But when we have a good years that is going to come, but if you can't make money in a good years, well, because after good runs, there will be difficult years going to come later. So when you if you can't materialize and capitalize from the good years, then it will be extremely difficult to capitalize, difficult years. And I believe that 2021 and maybe even first half of 2022 will be good years depending on how it moves in 2021. And I believe we're going to have a run like this, right? And we're going to have something like that going forward. I believe we're going to have a good year going into 2021 and also part of 2022. I have to say this again, though. That does not mean this market is going to make things easy, because it's never easy. There will be corrections. There will be pullbacks. There will be shenanigans. There will be some kind of move that will shake you up. Not only that, if you pay attention to these mainstream media, right? We're talking CNBC, Market Watch, Yahoo Finance, or you're following some people on Twitter and YouTube, and they're coming out with the reasons of why the market crash is going to happen. Trust me, I've heard it all since here. Right? But you know, it's funny because the way I look at it, these difficult years, and so many people are saying that, well, when is going to be a good buying opportunity? I'm sorry to say this, but this market has been giving you for 3 freaking years to accumulate, right? 3 years this market has given you great buying opportunities. If you didn't do it in 2015, 16, if you didn't do it in 2011 and 12, here you go. 2018, 2019, 2020. Those abrupt sell-offs gave you tremendous opportunity to accumulate, to ride what is to come. That does not mean that we're not going to have another opportunity. We're just not going to have an opportunity like we saw this year. We're not going to have another opportunity like we saw in 2019. But we will have opportunities. But it's not going to be a big opportunity, but we will have opportunities in the next 2 years or so. But I believe, you see how when this thing breaks out, you don't see a correction like this or like that, right? Same thing here. When this thing breaks out here, right? You see this move. You don't see a correction like this or like that. And here, you see a correction like this, like that. You're not going to see that kind of correction in the next year or so as we get into a smooth. And when I say smooth, I mean looking at the major primary term like this. It won't be smooth on a day-to-day basis. So if you want to ride this rally that is coming, you must learn how to be a long-term investor. Look at things long-term trader, right? And so I think we have a very, very good probability, very, very good chance. And because of the difficult last 3 years, 2018, 2019, this year, 2020, I believe we're going to have a good years going forward next year, 2021. And part of 2020, right? So that's my overall recap. I think what's going to happen is, I think the biggest problem that most traders are going to face is that either they get out too early on their longs because they think it's up too much, or they don't buy at a certain level they should because they think it's going to come down more. Remember, market is going to always make things difficult, right? A lot of people are going to ask for, I want to see a steeper pullback. I want to see a more correction so I can buy. But that's actually a wrong question because market has already given you those, right? Market has already given you those steep pullbacks. I know this was a bit extreme, right? But that's the idea. And that's the market. Because market is going to make sure it's difficult. When it comes to any kind of a financial gains in this world, only few will know to identify the real opportunity. Did you know this? If you ever follow anybody on YouTube who has millions and millions and millions of followers and their video gets millions of views, and they you know, try to teach you how you can make money, 99% of the times it's all scam. It doesn't work. It doesn't work. Because once everybody, millions of people hear about it, that whatever strategy they're selling, it ain't working. Right? Just like March lows 2020 this year. So most people thought that this is the start of a Great Depression or real bear market where it's going to get into a prolonged bear market. And a lot of people thought it's going to take years and years and years for the market to get back up. Remember, this market has created the fastest recovery this market has ever produced ever in the history of stock market. How many people do you really think saw this coming? None. Very few. Do you really think when they saw this coming, if they truly saw this, are they going to go CNBC and tell everybody about it? If you truly have a treasure map, are you going to write a book about it? Are you going to tell everyone on YouTube, to your millions of followers, that I have a treasure map and there's a treasure over there? No, because if all those millions and millions and millions of people go out trying to get that treasure, nobody's getting that treasure. Why? Because we're all going to kill each other in that process. So what happens when you have a treasure map? Well, you quietly go after the treasure. Maybe small group of people, right? That's what you would do. You wouldn't go on CNBC. You wouldn't write a book about it. You surely not going to go on YouTube, especially if you have millions of followers, right? It's not for everyone. Anybody out there saying that anybody can't make money in the market, it is actually not true. This isn't for everyone. It requires specialized mindset and fortitude and strength, emotional strength, mental strength, able to subdue and control and manage and maintain your fear and greed. It takes a lot of work. And every time you're looking for some kind of a, easy shortcut, they're giving you what you want to hear. And all I'm saying is, I'm trying to open your mind. I'm trying to open your eyes. So what I'm saying is, yes, 2021, I believe it's going to be a good year, but it won't be easy. It will not be easy. It will be difficult. And only few is gonna able to participate what is coming. Something is gonna happen in the market, some kind of fundamental, data is gonna happen, some kind of economical data something is gonna happen. This time this was COVID, right? But going forward, something is gonna happen, is gonna have a hard time for most people to stick with it, to hold through the positions. But that's just being part of this market, because it can't be easy. Because this market is designed to make few very wealthy, rich people richer, but everybody else to fund those rich, to fund the wealthy, right? Warren Buffett said that this market is a device for transferring wealth from the impatient to the patient. So, and I had to learn certain characteristics in my own life, in my own, looking at my own strength and weakness to be able to deal with this market. Because you can't change the market. Market is going to do what the market is going to do, but you cannot change the Fed. So you should not blame Fed. You should not blame Trump. You should not blame China. You should not blame anybody on YouTube or your family or me or anybody else, right? You should not blame anybody else, because you can't change anything apart from yourself. You can only change yourself. So if you can't change the market, if you can't change the Fed, you can't change how this market moves, then you must change yourself to be able to benefit, to withstand with the shenanigans, up and down moves that this market many times produce. So yeah, I think you know, I think the market is going to have a good year next year. Doesn't mean we're not going to have a correction. Doesn't mean we're not going to have maybe even come back down. You know, I don't know in the short term how this market is going to make a move. If you're very concerned about, well, I just want to know what's going to happen in January. I don't know. I don't know what's going to happen in January. And if you've been following my analysis, I want to give benefit of the doubt to the buyers for January, but things can change. And I am willing to navigate through those changes, right? So let's check out the VIX here real quick. And then I'll look at gold and Bitcoin in the video here. And so VIX, we're still hanging around here. Right, we're not really seeing VIX is still kind of moving sideways, but VIX does this. We can see that we got a long upper wick here. It happened last week, I think, but came back down. Was not able to close above my midterm moving average there. But I think next year the VIX is going to work to fill these two gaps here with some up and down movements here, and so you know, I think that's what the VIX is going to do. I mean, currently you can see, if I zoom out a little bit, we're not back at the low yet. We're actually kind of still elevated. So it's going to take some time, I think. Doesn't mean it's not going to pop again. It might. I don't know when, though. Nobody does. But I think overall, it's going to start to work with filling this gap and coming back down to some of these levels right there. Let's go to gold. Gold is making a little bit of a run here, so we found support on that 50% Fibonacci there, and then it looks like we got some moving average clusters in this vicinity, and looks like it's trying to break out right there. So let's see, there's a big gap here. Let's see if we can go up and fill this gap. But technical sense, we're still in that kind of a short-term, mid-term, lower highs and lower lows, right? But in the mid-term and long-term sense, though, we're still in an uptrend, right? We got the primary term lows, and higher highs here. We just don't know this is a confirmed low or not, right? We wouldn't know that until this thing goes up. At least, you know, it needs to get up and break above the neckline, and then we can say, hey, that looks like that higher low, right? So I think short to mid-term needs to get above 183 to change the sentiment to bullish, but long-term still in a bullish sentiment. Uptrend is up, and we want to give benefit of the doubt to the buyers in the long-term sense. Let's look at a Bitcoin. I'll end the video with this. So Bitcoin, since my last update, Bitcoin finally got up and filled this gap, and that's a good size. Better that gap gets filled than remained open. And with that, we saw some you see how the gap gets filled, we see some volatilities, right? Because when the gap gets filled, what happens? It acts as resistance. So there's that gap here, there's another gap here. So with that, we opened up a lot of gaps, a lot of these gaps here, and that's all gonna act as support. So let's put this here, and then I'm gonna put this right here, right? So we got some of those levels potentially support. We have a short to micro term pivot. Let's see right here. Let's put that there, right there. So we got the resistance and kind of hits that middle part, and then we got the support. So we kind of in that vicinity there. We'll see how it plays out. Well, there you have it. So you know, again, my take is going into next year, I think we're now gonna get into a smooth, looking at the monthly chart, right? We're gonna get into kind of that rally mode in the next couple years. I think we have a good chance of that, just because we've been in a difficult seasons last several years, and I think it's a good time to be, you know, anticipating that move and see how we can benefit from it. My investor promo is going to expire tonight. Tonight is going to be the last night before this. My December investor plan special is going to expire I'll put up that promo video, end of this video if you want to watch it, if you want to sign up. Otherwise, it's been very notable year, and what I also want to say is that if you somehow survive this year, because I know a lot of people, I'm talking retail traders, we're talking a lot of retail traders had a really, really difficult time. Even though the stock market is at all-time highs, a lot of retail traders, they're still negative quite a bit. So if you're floating, even if it's like breaking even, or if you're slightly positive, or if you're way, way positive this year, you're doing extremely well. You are, better than, for this year, 90-80% of retail traders, because I believe so many retail traders got trapped by that COVID decline. And a lot of people exited. A lot of people were trying to short this, thinking that that's going to be the bear market rally. And so a lot of retail traders had a really, really difficult time this year. And if not, lost a lot of money. So if you're floating, you're breaking even, you're slightly green, or you're doing really well percentage-wise this year, then you were able to come out of this massacre alive. And a lot of times when you see that kind of abrupt sell-off, a lot of times it turns into an opportunity, especially in a secular, macro bullish uptrend, because if you look back, all those levels were truly was a buying opportunity. And then when we get to the next bull rallies, you can have to truly benefit from it. Well, happy New Year to you and your family. Hope you guys have safe, relaxing holiday weekend. I'll come back for you 2021, January 4th, Monday, and we'll see how the market is behaving. All right, guys, I've decided that I was going to, start promotion for the month of December. And this is going to be, if you've been thinking about joining my Traders Club here, I am running this promotion until end of this month, which is end of December. So until the New Year's Eve, the 31st of December evening. So, as you guys know, and if you've been thinking about it, joining the Traders Club, I don't run promotion usually once a year. I do, and so this year, for the last month of this year of 2020, I'm running the investors membership, the yearly plan. So you would have to sign up for the investor membership to take advantage of this promotion. And so, a lot of people ask me, what's the difference between, just some of the things you talk about on Twitter and the, what you share on the, on your YouTube videos. Well, obviously, as you guys know, here's the plan there. As you guys know that, the daily update videos that you watch on a daily basis, it's looking at actually very, very short term of this market, just kind of forecasting what's going to happen this week, maybe next couple of days and things like that. On the daily, I do give you, on the weekend update videos, the weekend analysis videos, I do give you a little bit more comprehensive recap, giving you the longer term outlook, but it's nothing. And I'm not exaggerating things, but it is nothing like what you could find in the member videos. So obviously I got 3 plans here, but currently I'm only running the promotion for investor membership alone. And you would have to do the yearly, which, when you go back here to sign up, here, if you click on there, you'll get to that payment page, all of that. So, and it will get to that yearly pricing. I'll get to it. So basically, regular price is $4.90 a month for investor, and it's $39.90, right? $39.90 for a yearly. And with the promotion that I'm running until end of this month, end of this year, right? We got about remainder of this year, and you got some time to think about it, right? You don't have to make hasty decisions or anything like that. Think about it. If this is something you think it will be helpful in your own analysis, in your own navigation of this market, you can take advantage of this. So what I do for my members is that obviously they would have a full access to all of my long-term stock picks, right? So, and you hear me talk about this kind of stuff. I mention things, my recent trades, some of the position that I hold, and I talk about it. I mean, you guys, if you go back to some of the videos back in like April lows and May lows, you guys remember me talking about, I like Google here, I like Apple here. You guys know that I was buying Bitcoin. All of those entries, exits, and add points, you get all of that picks and updates right here, right? Entry, add, and updates you receive as an investor member. So, and these are not just like stock picks for the sake of stock picks, right? Like I'm picking stocks here and there. No, actually, these are the stocks that I'm actually getting into. I will not share any tickers if I myself is not involved in it. So if you can think about like basically if I'm going to get into this stock, for me to be investing on this stock or position trade, then my member is going to hear about it and get updates on it ongoing basis, right? So, and I know that a lot of members that I currently have, almost all of them come from day trading, comes from like swing trading, come from overnighting, scalping, you know what I mean, here, in and out kind of thing. And as they watch my videos, they realize they want to be more long-term. So they don't have to be so occupied with the market. They want to look at things longer term. To able to do that, right? You really have to have a good analysis, macro trend analysis, right? This is something that I do with my members. If not a weekly basis, you would have these updates on this throughout the week, throughout the days. And also there will be special report videos where I will cover, we're talking macro, where the market is going next 10 years, right? I actually done just this recently, this new video for my members, right? S&P 500 destination, 16,000. And if you look at the number now, you're like, what? That doesn't, and if you watch my video, and this is about an hour, maybe hour and a half video, and there's a video like this in my special report video. There are videos like this, like 6 of them, going all the way back to 2016. And I can stand on my 2016 analysis that I've done back in 2016 lows. I'm talking when Spider was trading at 180. We're talking S&P at 1800, right? We're sitting right now 3700, 370 on Spider, right? And I can still stand on that today because we understood the macro sense of this market. That's why we stood strong even after the COVID decline. And I've done a video for you guys here. If you go watch this right here, March 21st, this is a free video that I've done for my YouTube followers and my Twitter, my social media followers. And obviously, member video will be much, much condensed and much more, comprehensive and covering more areas. And there will be more videos like this on a special report section. And there will be more videos ongoing, giving you guys an updates where the macro sense, because things can change, obviously, right? And so that's that's how we've been navigating this market since 2016 lows, when Spider was at 180, right? Now Spider trading at around 370. This means Spiders could be at 1600, right? And I go over this with my members, and we talk about these kind of things while everybody is so concerned about these short-term fluctuations, always getting scared, right? So that's something that I always tell my members is that if you fully grasp on where the market is in a macro trend perspective, you won't be scared when there is these kind of fluctuations, volatility, because that's market, man. I mean, you cannot have this market without volatilities. That's just given, right? That's just part of this market, and people always trying to avoid it. That's the biggest problem. When you're trying to avoid volatilities, is when you're gonna miss out big runs, and that's, you know, exactly what I'm talking about. And if you're, you know, kind of also want to, if you have like a larger fund, you're working with a big capital, we're talking about $1 million or more, definitely you want to put a lot of that percentage of your portfolio into index fund, and then have some other portion get into some position trading, long term. You know, you kind of want to have a good, well diversified portfolio, especially if you have a larger account. And this is where it comes handy here. I also go through my index fund investing guidance, guiding through which indices to get in and how much, which levels. And that's something that I go through every member plus or member semi-monthly report. So as investor members, you will get your semi-monthly report. And in those videos, I go through all of my current holdings, give you guys a review on it and an update, including my index fund positions, right? Keep in mind, again, for my members, every single tickers that I go through, every single one of them I am involved in, right? I don't just pick stocks and just tell you guys about it that I think it's a good buy and I myself don't have it. That way, you will continuously get updates on this, right? So my job as your instructor here at Traders Club is telling you where the market is going in the big picture, right? In the long-term picture, and also intermediate term, right? Short term, we cover this on my free videos on our daily updates, and even on the week, you know, on those free videos that I do for you guys on YouTube videos. But with my members, I focused on the long term, and then how we should be positioning ourselves, right? And along the way, you will get your updates on, I'm holding Google, I'm holding FedEx, I'm holding Alibaba, I'm holding Apple. Okay, what should I do? When should I close some? When should I buy? Which level I'm going to be buying more? Which level am I going to be closing it out or closing partial position? Things like that. So, right, that's what I'm saying here, a case holdings review, right? So macro trend analysis. And we have a video lesson library. And if you're really you really like this technical analysis stuff, you like analyzing things, you want to learn more about how I approach this market, there's tons of videos for members in a video lesson library. There must be, I don't know how many, 50 videos, some of them are like hour and a half, 2 hours videos, showing you all the way from like how to properly set up your charts. How do you look at bullish divergence? How to look at your indicators? All of that. And some of you guys even wondering, what about those chart setups, Kay? What about your configurations? I have those disclosed in my member area. If you want to get really techy with that, like if that's your thing, like you want to learn all this, you want to learn how to use these indicators, how to look at the market, all of that, you have that in my video lesson library. If not, you can just, you can use this membership to help in your own analysis and navigate this market, right? Obviously, the market guidance, right? I've done guidance for you guys here back in COVID-19. This was chart, right? Near the March lows right here. Something like this. There's analysis, a lot of analysis that I've done for my members back in March lows, April, May, June, where to buy, what to buy, right? And I've done something similar here, March 21st, right? March 27, right? We're talking about generational, maybe even lifetime buying opportunity. March 27, right? Major support, potentially bullish reversal. April 3rd, important inflection point. April 11, constructive follow through. April 19, okay, we might have the lows have put in. And we're talking when the S&P and the spider is trading at 220, 230, 240, 250, 260s. Now trading 370s. This is when, when the mainstream media were lying to you. TV, quote-unquote, experts were lying to you, right? Everyone out there were lying to you that this is a bear market rally, right? This is not going to end well. Well, guess what? 3-5 months later, we're at all-time highs. And guess what? Semiconductor NASDAQ performed 80 and 90% since the March lows, 50% year to date. Majority of people were not able to forecast this. Do you know why? Biggest problem is this: macro analysis and forecast. We never were in a secular bear market. We're always in a secular. This is something we understood here at the Traders Club even after the COVID decline. I think Wall Street Journal came out, said something like middle of March that bull market is dead, or bull market ends, or bear market starts. You guys remember that article? Right? Wall Street Journal or something, some other major publication, very, very popular, right? Bull market ends or bear market starting or something like that, right? No. We are never in a secular bear market. And all of this I explain in my videos, in my special report videos, so you understand. Are we in a macro secular bull market or secular bear market? Because in a secular bull market, you get those fast recoveries. In a secular bear market, you don't. And you gotta understand. You gotta able to distinct the two, right? Differentiate it, so you can able to adjust your portfolio accordingly. March lows, April lows have been my biggest buying opportunities, right? I'm actually thankful for March lows and April lows that happened with the COVID decline. So obviously I do offer other plans here, other memberships, and those are for option trading, other things. But you know, for if you're looking to kind of understand these things long term and want to learn how to position trade and long term invest in this market because you're tired of getting in and out, getting stopped out. You look at your account last couple of years, really haven't gained anything. Where is the market? Again, market was 180 in 2016 lows. We're close to 400 to like this year, right? And because when you're in and out, a lot of times what happens is you miss out on a big moves. And then when you see a big COVID decline like that, a lot of people get scared. They trying to short. Market goes right back up. And this is where people try and short, or trying to, time it the next leg down, thinking this is going to disturb a bear market. And they completely miss out and lose money and miss out that run. And I call that double loss, because you lost money shorting and you lost the opportunity. So there's opportunity cost, missed opportunity cost, and you lost money shorting. So actually that's a double loss, right? So anyhow, so that's the membership there with the investor membership that I'm running right now. So feel free to go. I'll put the link below, description below, so you can check it out and go through. You can go through these things that I've presented to you. There's a performance here. There's a broker statement here for 2020. These are my win rates. You can see I got pretty high win rate, right? Because I do not get into a position in and out, in and out, in and out. That does not mean I get into a position that goes straight up right away. That is not what this is mean, right? What this means is, let's say I entered long, maybe this thing did this or this did that, but because I do not let this market get to me or trap me, all right? I don't want to fall into a victim of some kind of a shenanigans or head fake. Let's say I got into it here. I might add here. And you guys saw how I trade my Bitcoin trades. You guys remember that? Something like that. And then when I start getting it out, those are winning trades. Instead of getting stopped out here, getting stopped out here, getting stopped out here, getting stopped out here. You know what? I'm sick and tired of this stuff. I'm going to throw this ticker away. Month later, you come back, that ticker is like 30, 40, 50% higher. You guys know what I'm talking about. And that's the reason why I think I've been having really good win rates in the last 4 years. And last 4 years wasn't such a greatest market condition either, because we've seen like market goes up. 2017 we tanked 12%, market got up. 2018 we tanked like 25%, and then market got up, and there was a COVID decline. So market was actually pretty volatile in the last several years. It was actually difficult seasons that we actually went through in the last 3 years. And I actually think, and that actually helps this market in the next 3 to 5 years have a good years, because we had such a kind of a volatile years last 3 years or so. So you can go through these and click on here, right? Join, right? Again, you have to sign up for the investor yearly plan to qualify for this special promotion that I'm going to be running on the end of this month. Again, the last day will be December 31st evening time. Click on here. So you'll come to this page, right? And then, carefully read through those. Make sure to fill out all the required fields and click on here, sign here. And then this is where you're gonna click on that, and it's gonna get to your PayPal account to put all your payment information, right? So hopefully, if you do sign up, I'm looking forward to trade and invest and navigate this market with you. If not, it is totally cool. Continue to follow me and on Twitter and StockTwits and YouTube. And you can continue to follow me that way and follow my work. But thank you for listening to this presentation.